y'all doing? Thanks for showing up and supporting me. My name is David Erfle. I am the junior Miner Junky. I write a weekly column for Kitco. Comes out on Fridays. And I've been doing this newsletter for about a year. I'll talk more about that after the presentation. I'm here to talk about how to build and maintain a successful junior resource stock portfolio. And right now, it's good to have a lot of cash. As right before the show started, you saw the gold price lose $1,300 an ounce. And now's a good time to go shopping. You can take your time because I think the sector's still going to be weak into that FOMC meeting on June 13th. But here's how I would do it if I had $100,000 to put into the market right now. I'd put $10,000 each into growth-oriented producers. There's one at the show here that I'll tell you about after this. Put $10,000 each into 4 gold mine developer/explorers, and $5,000 each into a mix of 6 early-stage copper, zinc, and precious metal explorers. The stock I like at the show here that is a near-term growth-oriented producer is Alexco Resources. This company's been around for a while. They did very well in the last bull market. Went from 50 cents to $10 in about 3 years when the silver price ran up to $50 an ounce. They have a U.S. Amex listing, which really helps as well, bring more liquidity into the stock, and also U.S. funds can invest in Amex-listed juniors that get over $4. So that is very helpful. And they've done a great job maintaining a tight share structure during this whole sell-off. A proven management team, of course, you've heard this time and time again. It is key. And solid balance sheet. Alexco possesses this. 100% control of low-cost mines. Absolutely, they do this. I mean, it's one of the highest-grade silver districts in the world. 240 square kilometers in the Yukon with power, and it's year-round. But they do have a stream on their stock from Silver Wheaton, but they've restructured that stream to be a lot more beneficial to the company. Operates in a safe jurisdiction. Alexco does that. They're in the Yukon. Management does own a lot of the stock. Silver Wheaton, they're Wheaton Precious Metals now. They own, I think, 5% of the stock, something like that. And the company's going to be making a production decision in Q4 of this year. And if the silver price helps them out and has an 1850 floor, this stock will do really well. How to choose a developer explorer. My favorite is that Orezone. And by the way, I own all these stocks that I'm talking about that I purchased in the open market. Proven management team again. That's essential. District scale land package. Orezone has this, and it's 85 clicks from the capital city, 5 clicks from the paved highway. The ground is flat as a pancake. The project is really simple. They've cut $100 million off the capex since the new management team's taken over about a year ago. Patrick Downey's been the new CEO, has been buying shares in the open market for the past year every once in a while at these prices. They just had a $45 million strategic finance, and you love to see strategic finances in these companies because you know they're going into strong hands. So they have $55 million cash now. And their feasibility study is going to come out at the end of June, and I wouldn't be surprised to see the capex on this mine about $150 million. It's in Burkina Faso, which is why it's so cheap. People associate Burkina Faso with risk, and I don't know why. Probably because it's in Africa, but it built 10 mines there in the last 10 years. And where Orezone's project is, there's 2 other mines within a 15-kilometer radius. B2 Gold has one, and West Africa Resources has one. There's 10 million ounces within 15 miles there. Preferably less than 250 million shares out. The share structures are very important in these things. You don't want them to get too bloated. And now with that strategic finance, Orezone has about 230 million fully diluted. Enough cash, I just talked about that. They have plenty of cash into the next year. And like I said, management has been buying shares in the open market. How to choose an early stage exploration stock? Look, most of these companies in the junior space, the high risk companies, they really don't have much. If you go down this checklist, and you can eliminate a lot of them. Two of the key things I talked about before. The third one, the project should preferably be located near past or current production of large discoveries. That's always nice. Tight share structure, that is very key. And make sure there's not a lot of in-the-money warrants overhanging in the stock, because that can really put a cap on the share price in the short term. These companies, go to their booths, talk to the companies. Torque Resources is my pick at this one. These guys are proven company builders. They built Keegan, sold it. It's a producer now, Asanko. They built Caden and sold it, and they sold Caden in a bear market with no resource in one of the most dangerous places in the world to mine, Guerrero Gold Belt in Mexico. That was a feat. And Oren Resources is another one that management has built and is putting forward right now. And Torque has 15 million cash, and they're on trend from my favorite company right now, which is Marathon Gold. They're about to put a PEA out any day now. And Torque Resources has a property that butts up against the Valentine Lake Gold Camp, and they have more property that's on trend from Marathon's property. And Marathon's been stepping out there recently, and the Torque share price has actually gained more than Marathon's share price after these step-out results have come out. They have enough cash, like I said, and management, Ivan Bebek and Michael Kasawan, the CEO, has been buying shares at these prices in the open market for the past few months. Okay, maintaining the portfolio. Risk management is vital to your portfolio. I mean, that is key. Just recently, I was fully leveraged for a breakout in the sector. When that didn't happen, I alerted my subscribers that I was going to do some risk management selling, build up a 20% cash position in the past few weeks, as I anticipated what happened yesterday happening, because the sector was unable to break out when gold was trading between 1,300 and 1,365 for 4 months. And when something is unable to break out, it usually breaks down. And that's what's happening now. The US dollar looks like it's going to run to 95. The 10-year Treasury is hit 3.1 yesterday. I wouldn't be surprised to see gold continue to sell off down here to 1280, 1275 before we see a decent bounce. But I would still wait until that FOMC meeting to buy anything. Just watch, do your due diligence. You got all this time to take your time and check these companies out. Have a basic understanding of technical analysis. Key buy points is key. So technical analysis helps you with that, but you don't want to base all your decisions on technical analysis, because a lot of these juniors, they're very thinly traded, and technical analysis doesn't really help you very much, because the fundamentals would do better on these thinly traded juniors. But technical analysis is good for the more liquid juniors. And July and December is a great time to be buying juniors. We're coming up on July. Gold has historically bottomed in July and December you have tax loss selling in it. It looks like we might have some really good deals in tax loss selling again this year, which it seems to start earlier every year, so around October. But who knows where the gold price is going to be. I'm just giving you some ideas of what could happen. With what's going on this year, it's been very difficult for anybody to make money in anything, in any sector this year. So having a good cash position right now and lots of time to do this due diligence is really beneficial for you. Always have a selling strategy before you buy anything. What is my goal for this stock? if they make a major discovery, is that when I'm going to sell some? When they put out a PEA, or when they get sold to a company, what's my ultimate goal for this stock? And if you're down 20% on anything, this has been my rule, and it's worked well for me. You made a mistake, you bought at the wrong time, sell it, because hope is the worst thing to have in the junior sector. And if you're down 20% on something, it's always best to sell it and come back and readdress it later and watch it. Or there's always another train leaving another station somewhere in this sector. So it goes back to risk management. That is beneficial. And selling strategies can depend on where you live. Like I'm a U.S. citizen, so my tax strategy is different than Canadians. If I have something that has a long-term capital gain, meaning I've had it for over a year, and I sell it, that's 15% capital gains tax I pay. If it's less than a year, it's 28%, it's a huge difference. So I base my strategies on that a lot, especially towards the end of the year during tax loss selling season. And 3 keys to the sector is research, timing, and right now you have lots of time to do research and to get your timing right to buy something. And the best time to buy something is when you feel terrible doing it. And a lot of you are going to start to feel terrible in a lot of your juniors coming up here, because I think it might get a little uglier for some of these juniors. Maintaining the portfolio, take profits, of course, but I don't adhere to this rule of when it doubles, sell. That is a lazy man's way to take profits. If you do your due diligence in a company and you feel the upside is a lot more than a double, you wait a while to take some off. Each stock has a different circumstance. You have to judge each stock separately on when to sell it, when to take some profits. For me, Novo Resources was a great example. If I would have sold that at a double, I'd have left a lot of money on the table. Does it come back to bite me in the butt sometimes? Yes, it does. I've had some things where I've lost profit because of that, but I've made more money waiting more than I've lost money not waiting. Do not fall in love with the position. That's absolutely true. If it's down 20% and you're like, I really love this company, I really love this stock, I really love the property, that's fine. You can always come back to it later. Take your loss and move on. Never chase any junior. This is a big one. High-profile newsletter pumps, they happen all the time in this sector. You see something running, you want to chase it, don't do it. Don't do it. It always comes back down. Like I said, the best time to buy something is the chart looks awful. You've done your due diligence. It's a great buy. It's a great value. There's not much downside left. That's the best time to buy. And like I said before, do not rely on technical analysis in thinly traded microcap juniors. That's true. Don't let a single position become too overweight. That's a big one too, because it could really affect your portfolio. You've had something that's gone up a lot. And this is another example of Novo. It did really, really well for me. I had to take some off the table. I had to cut it down, because if you don't, when bad times come, like right now, then you're going to end up selling it in a stressful situation instead of a thoughtful process situation. So, and do not buy sector 3 times ETFs to hedge your portfolio unless you're a professional. Basically, these things are very dangerous, and they shouldn't be purchased as an investment. They're trading vehicles only, like Dust and Nugget. Stay away from them if you possibly can. I'm going to talk about my business now. I've limited it to 200 people because I give a 24-hour notice before I buy and sell a position. And in thinly traded juniors, I don't want my subscription service to become the trading market for that stock. And I want everybody to be able to get in at the same time I do. I'm fully transparent. All my trades, everything I bought, everything I've sold, what I paid for it, how much I lost, how much I made, is sent to you each week, updated. That includes my private placement account as well. Last year, I was up over 45%. The year before, I was up 99%. This year, I'm about even. It's been a tough year. A weekly update is sent to subscribers every week. During the week, I send you updates on if something important happens in the market, I send an update. If a company has an important release coming out, I send out an update. If a company, like when Marathon puts out their PEA, I'll probably put out an update and tell people what I think about it. It's a very important release. I sent out a risk management update when I thought the sector was going to break down a couple weeks ago. And I strived for my subscribers to listen to me, to be very risk averse with what's about to possibly happen if gold breaks 1,300. And email support. I'm available 24 hours. You send me an email. I usually get back to you within a few hours. I'm constantly checking my emails. And if you've got any questions about any companies that I invest in or companies that I don't invest in, if companies that you like, if you can run them by me. I'm available 24/7. I do not receive any monetary compensation from any companies. I'm totally unbiased. If a company that I own, that I've paid good money for, does something that I don't like, I'm going to sell it, and I'm going to tell you why I sold it, and I'm going to tell you why I think that happened, whatever the reason why I'm selling, or whatever the reason the company did something that I didn't like. I invest my own capital in all these companies because I believe in the management teams. I try to make relationships with all these management teams. I try to do that as much as I can because anytime something happens that I'm not sure about, I send them an email, they get right back to me. And if it's real important, I'll send out an update to subscribers. And each week I update you on as many companies as I can if there's something going on that I feel is important. I do this professionally, so performance is crucial to me providing to support my family. So my numbers are important to me. I need to make money. So if I make money, you make money if you're following what I'm doing. I take calculated risks based on my intimate 16-year knowledge now in the sector. And like I said, I manage my risk, and that is how I've survived in this sector for the last 16 years. All of my knowledge came from extensive research and investment trial and error, using my own funds. I've learned this all on my own, and I'm constantly trying to improve my knowledge in all the companies that not only I'm considering investing in, but all the companies I invest in. And that's it.